the chapter, and then we're going to go over and explain it. We're going to show it in action, and I have a video that I will send you guys as well afterwards that kind of goes over this in theory to where you can see it deeply explained, and just, I don't know, something I found that's like a more like a, what is it called, AI generated put together photo animation thing, right? So I got one of those that'll kind of show you, but for right now we're going to do the one-to-one moment. Candles aren't just pretty colors on your screen. They're tiny explosions of human emotion, greed, fear, and a little bit of chaos. And if you can read them, you're basically reading the market's diary. Candlesticks don't just tell us where the price went, they tell us how violently it moved, how confident traders were, and where the battle lines are being drawn. This is where candle momentum and candle range theory come into play. If you ignore this, you're basically trying to predict the weather by watching one cloud. Sure, sometimes it works, but mostly you're going to get wet, right? Candlestick range theory really is going to help us to understand highs, lows, open, close, and how they can be taken out, how they can be swept, things like that. We have candle momentum is all about the strength behind a candle. Think of it as the market shouting versus whispering. So when we're thinking about candlestick momentum, the bigger the candle, the bigger the body, should I say, the more fast it moves, the more confident the market is, the more aggressive the market is. The smaller the body and the longer the wicks, the more indecision, the hesitation, the confusion, where you can see a trap, where you can see exhaustion, right? So we're looking for big bodied and little body candles. We're going to correlate those and put them together. We're going to create confluences so that we can see each candle. As each candle gets bigger and bigger and bigger, it's going to start to tell us about that candlestick. So now we see that buyers are stepping back in again, and we're seeing a heavy volume. So based on that, I can go to the 1 minute time frame, seeing it be swept, and I can look for an entry off of anything right here, honestly. A big green candles, bull just kicked in the door and they're taking control. So let's say a big Marubozu. If you guys know, you guys went over chapter 3, you guys are going to see a big Marubozu. Those Marubozus are momentum candles. Those are big volatile candles. We can say that those candles have huge confirmation in them where a lot of people stepped in. Now, we can validate that with some volume. You guys can go over volume, or we'll be going over it in another lesson as well. But you're going to validate those big candlesticks as well with volume so that you're not just being bluffed out. Because if you have one big candlestick, but then it's really small volume, then you know not a lot of people got into that trade specifically. The market's just moving to correct itself and moving to do what it needs to do to keep the algorithm going and people trading. There's a reason why we have gaps and balances, because the market skips those, and it's just all liquidity, right? It's all liquidity. Never trade a candle in isolation. Momentum needs context. Past candles, trend, and key levels. A single monster candle is the wrong spot and can be fake out waiting to happen. So just because you see one big candlestick does not mean just jump in. Just because you see that candlestick, don't just jump in. Usually you want to take about 3 to 5 candlesticks, right? You guys want to start looking at multiple candlesticks, see where it's running, see how it's picking up, see where it's pulling back to. The market is all about liquidity and chasing it, right? Where's it going to go? You know, how long has it been there? We know that this market has stayed in this area for the most part. If you look at this market, it's stayed well within this range for quite some time now. We could call that consolidation, right? These are just little small sweeps before it comes back down to the area, little small sweeps before it goes back up to where it was. So we can assume, right, that the market's going to travel back here because it was from here, right? So forth and so on. So, okay, we have big candles. Bigger is usually better for trend followers. If you are a trend trader, there's multiple ways and strategies that you guys can go over. If you're a trend trader, the larger the body, it usually indicates a follow through, right? If you have momentum candles are probably at breakouts or supports and resistance. So let's just say this: you're wanting and anticipating a reversal candle. Well, you see the trade coming down. You see it exhaust with a smaller candle, And then all of a sudden you see that one big candle you've been looking for, right? You're going to watch for the candle to pull back into your area, and as it starts to reject that low and start going back up, because it's going to give you a big candle. This is where candle range theory comes in. But it's going to give you a big candle. That big candle is going to end up coming back down into around the equilibrium, 61, whatever you guys want to call it, 31, the fibs. Learn your fibs. But it's going to pull back into an area, and then it's going to go back off because it's got to take liquidity, and it's going to do those through multiple time frames. So one big candle on the time frame with wicks and everything, it's going to look like a bunch of other candles when you start breaking it down. Watch your wicks. Long upper wicks on a green candle, bulls got greedy and bears pushed back. We've talked about this. When you start seeing the candle shoot up and all of a sudden it starts shooting down, it's because these guys are like, you're not fucking going that way. You're not stepping up anymore. We're not going any further. You're going right back where you came from, right? It's rejection. It's straight up rejection. Long lower wick on a red candle. Sellers tested the floor and buyers stopped it. It's simple. You're not going any lower, right? Volume confirms momentum. We were talking about this. Candles might look strong visually, but if nobody's buying that area, it's just for show. So always check your volume. If you notice that the volume is increased since the last time you've looked around, such as this area has usually been around here, all of a sudden we see some sell volume pick up as it got higher. So we could probably assume sellers were probably getting out of their sells because it rejected and created a market structure shift on this candle, right? A lower time frame. We're probably chasing these highs up here or these highs right here. So we can assume we're going in that way. Sequence matters. One big candle is cool. 2 or 3 in a row in the same direction. Now that's a trend forming, not just noise, right? And at that point, as you see, exhaustion. So you're going to see people start to fight back, and you're going to want to see that and make sure that it's not. So just because you keep seeing candles means, and I'm not saying to hesitate, never hesitate. Candle spikes off a level and then reverses. The market's trolling you. Wait for confirmation. When you see rejection, start waiting. Be patient. Be very patient. Right? And I say this because the market is always going to give you guys trades. The market is designed to make opportunity. You are going to have a fear of missing out. Right? And when you have that fear of missing out, you're going to want to jump in, jump out, jump in, jump out, jump in, jump out, right? Go take a break, walk away, okay? There's always money to be made in this market. This market is literally made for opportunity. Even if you walk away and come back, it'll be here 5-10 years, and prior to you or even existing, this was already been around. Keep that in mind. What we're designing and what we're trying to do is create a strategy for you to be consistently making a certain number of points that fits your dream, and then showing you how to do that, and then scaling it. Right? We want to show you, if you want to make $500 a day, we're going to figure out on your time, your day, with your strategy and your knowledge, how to set 20 to 50 points in that day and time that you want to. Find those 20 to 50 points to where you don't ever have to work a job again. Because all you need is 20 to 50 points. And if we can keep figuring it out, then we're good to go, right? Consistency. This is an idea of strong momentum. You see how the exhaustion comes in? Exhaustion comes in and it starts to bounce. You got candle range theory. Candle range is the distance between the high and the low of a candle. It will tell you how much energy was expanded during that period. Wide range candles are heavy in action, strong conviction. Market participants were active and momentum is likely high. Narrow range candle, market's lazy, indecisive and waiting for news. Wide range candles at support and resistance, someone's making a statement. So as you're coming to a support or resistant level, right? Let's say we're going to a resistance level, the market's shooting up. The market's shooting up. And we see this nice big momentum candle right here. Right? We see this nice big momentum. We see a nice big momentum. This is saying something. Market momentum is going up. We're showing increase, but it means nothing without volume. Right? Now, the bulls, and this is white only because the bears have control. When this becomes control with the bulls, this will turn blue. It's just my volume indicator. There's other indicators that'll tell you. So I know that this has control. They have control over this candle right now based on the volume and it's not a it doesn't really tell me like who has more volume on either side or differentiate the volume. It's just who's winning, who's losing, and that there is quite a bit of volume within this time, right? So it's showing me that there's buyers in this time period, and they're more than likely bears. So it looks like I might have got in my trade earlier, a little or too early earlier. Took a $300 loss. And my nerves are shot right now from Friday. If any of y'all didn't know, I took my biggest trade attempt. It was a $5,000 hit. I got scared out of my position. Emotions, couldn't hold the strategy. I leveraged in a little too much. At no point should you risk 50% of your account, guys. At no point should you put your account at risk. In any trade, your account shouldn't be at risk. I put it at risk. I was very confident. And the moment it went back out of my direction for a split second, I really did oh my God. So, and then it fell. Within probably 3-4 minutes it fell. I probably would have we'd be talking differently. We'd be seeing $100,000 in the bank right now. So it's a $5,000, hit for a $100,000 reward. It was well worth the risk to reward, but I couldn't hold it out. When it spiked at 5,000, I'm just not prepared for that yet. I can be honest with you guys. That was a little more than I was comfortable losing in such a short period of time. Had it gradually went up, it would have probably been a little different. I've been calling myself stupid, but I probably would have held. But the moment it spiked, I was afraid of blowing my accounts. So one thing I can tell you is the last time I went for this attempt, I let my account be blown. So I ended up blowing my accounts. This time I kept myself from blowing the accounts. So we're all going to make mistakes, learn from them, and just keep going. Candle range tips, right? Measure for context. Compare candle range to the average range of the last 10 to 20 candles. That is big deviation. It equals a significant moment or exhaustion, right? So look at the other candles. Are the candles around it being big? And if there's small candles, if you have a bunch of big candles and all of a sudden there's a bunch of small candles, well, that's probably telling us something, right? If all of a sudden we've been seeing big candles and Marubozu after Marubozu after Marubozu, and then we're just seeing these spinning dojis stop to pop up at this price level, that probably indicates buyers or sellers is probably exhausted in this area and is probably ready to either pull back or look for another area of liquidity to take off of, right? Extreme range signals. The biggest candle in the past day or week often marks key points. Could be the start of a trend or over an overextension, right? So in candle range theory and how you're going to make your daily bias every day and how things are going to play out, most of the time your candle is always going to chase liquidity, and it's going to chase the liquidity that it needs to chase, right? So, but we can determine that based on a high and low, based off of previous days highs, previous day lows, because we always know that when we're looking at stuff. This was a great entry I should have took. Too busy talking.
Order filled.
Let's take it. I'm gonna get chased out already. That's what I get for being greedy, right? So if you look, it's always gonna chase high, low, high, low, high, low. I'm gonna let that run. High, low, right? And then we're always going to the high lows. Now, remember, bigger time frames are more important. The fact that bigger time frames are more important tells us where it's gonna chase. So in the 4 hour, if we're on the lower end, it's probably gonna go chasing the higher end again, right? We're in an uptrend. We've pulled back. It's time to chase that higher end again, possibly, right? So we could be probably coming back up to here. If we come up to here, we form what is called a double top. But if we see a nice big Marubozu, let me see if I can draw on here a little bit. Sorry. We see a nice, let's just use I guess a rectangle would work, right? So let's say we see a big green candlestick that goes like this. Whoa, what the French toast. Say we see a big green candlestick, right? We can probably anticipate that the market's going to pull back to the equilibrium of it, and then the moment we see it sweep, it's going to come up. So we can anticipate through, oh look, nice. We're going to hold this for a while. All right, so that's going to help us. So we're going to usually mark as you guys get better, you can kind of keep it in your head and stuff like that. I don't like my charts being so filled. I feel congested. I feel like so confined in my chart. So I like to keep it open and not so much drawings on it unless I'm showing stuff. But you guys are going to mark like your previous day high and previous day low, and what's going to usually happen is your previous day high will be swept and you're going to chase the previous day low, and then you'll bounce off the previous day low and you'll chase the daily high, you know. And then, you know, what will happen is at some point through the week you'll hit your weekly high and weekly low, and it'll chase those weekly highs and weekly lows and monthly highs and monthly lows, and it can get really, really, you know, chasey, you know. Looks like we're going 1 for 1 today. We have a 200 EMA on the 15 minute. We can expect some resistance. I freaking can't stand these charts right now. Okay, we've crossed over. This is why I use this RSI. Just so you guys see, this is me adding confluence to my 9-day EMA. You see that right there? We've crossed over the 55 on the RSI, so I know we're being bought. And I crossed over and signaled on the 15-minute EMA. Crossover and signal right there. We have confluence, and I can expect to keep running until we either A, cross back over the line, signal confirm, so forth and so on. And I'm pretty sure we would be chasing this liquidity first. This would be a $3,000 trade, and then we'd have up to here, which would be a $5,000 trade. I'm pretty sure we would be chasing around this area first if we cross this and keep moving. So we will wait. Maybe you guys will see a crazy trade tonight. All right, so let that run. And that's just look. I mean, just look how quick the analysis is. We're jumping back and forth. I see it. I can see the confirmation. So simple. It didn't take me numbers. Didn't take me an hour. Didn't, right? And I'm technically up $350. So you guys could have made half of whatever money you wanted to make tonight. Let's just say you increase the contracts. I'm in on 5 contracts. If I was in on 10 contracts, we'd be up $700 tonight, and that would be exactly what I want to make for my business account anyway. We will look to make around $700 a night for Sedulous Society. So, and I'm trying to implement that more. I've got to get a bank account, and I'm putting that into perspective. So, momentum candles, right? Momentum change detection. Watch for sudden shift in candle size direction. Often the first sign of a trend exhaustion, right? So if you're seeing all these big candles and all of a sudden the candle starts shrinking, I'm not saying coming to a dead stop. They start shrinking, right? We're not talking about a Marubozu and then a spinning doji that's this big. We're talking about a Marubozu getting smaller as it trends, right? That's showing you exhaustion. If it is an instant like doji, it's more or less a sweep. You were probably wrong, right? Because it's a sudden sweep, means a lot of sellers stepped in. It was a fake out. And it could just be unlucky, right? But if you're right, it should slowly, like you see here, it should slowly start to take in, right? Even if we have a pullback, I can assume that it's a certain thing happening, right? Well, we have the 200-day EMA right here, so it's we need to be breaking above it, right? So we should be dealing with that within the next 15 minutes at 9:45. So first minute of this 15-minute candle, they're trying to push us down. We can watch it respect right here on the 15-minute. Notice how this is 9-day EMA. I want you guys to pay attention. Notice how this right here is the 9-day EMA. If we go down to a further time frame lower, it becomes my major support 200 EMA. So once I break this 200-day EMA, I know for a fact on the higher time frame, I have broke my 9-day trend, meaning I'm wrong now, right? Okay, so that is exit strategy, right? On the longest term. So if I wanted to, I could set a stop loss for down here at about $800, right? It's under my 200-day EMA, past the liquidity. I could go down here if I wanted to, risk a little bit more if I could. Nice healthy pullback and a fair, like, you see how this is just a random strong doji after a gap, but we're still above it. You notice how this candle, this sudden, you have this nice big candle, and then the doji hit, sudden stop. We gradually came in, sudden stop, and then it came down. It happened too fast. Buyers step back in to keep it up really, really easy because it happened too fast. That means the market's just allowing it to move, right? So watch for that. Right? This is respect. We call these respecting the line. This is respecting the equilibrium of this line. Now this one might not be, but what can we do, right? So, and again, we're not going to be 100% right all the time, but we can put you into a chance of success because it happens more than often this way. You see it here. Look at the sudden doji out of nowhere. We have a pull back down. It's a fake out. It continues to go right back up, right? So we can continuously see this happen over and over and over, right? Well, the market also has to deal, this is lower time frame. As this creates a big liquidity right here in this area, this is a big candlestick, right? On the 5 minute, it looks different, right? So we start to perform higher time frame liquidities on the bigger scale. So we've got to respect the bigger scale. Don't get drowned in the noise of the lower scales, because candle range theory is going to continuously work. But if you get lost in the momentum, you're going to forget about the higher time frames. You're going to forget about the areas that you're needing to respect on the larger time frames, which is why you always do a top-down analysis. We start every day with the daily, right? We start every day with the 4 hour. We look where it's at. We mark our highs, we mark our lows, we mark our key levels, we see where our eyes are attracted to. We mark those levels because we see those. And we want to see respect, such as hammers, or respect such as hammers. We want to see respect such as Marubozus. And when we disrespect something, we want to see the same shooting stars and Marubozus, right? That's going to determine us. How we can determine if it's continuing to support or break through. And those larger time frames are those magnets, right? So if we're coming into a weekly low, you can sure as hell bet that the moment you see a hammer and then a Marubozu and a lot of volume, a lot of people probably just stepped into the same position you're wanting to step into. And 9 times out of 10, you're probably going to be right. The problem is did you get out with enough money that satisfies you and didn't get greedy and didn't get, crazy over it? I mean, we could have had a $300 gain, but we sat, right? And then we got a little too greedy. So now we're at 125. I should have took, blah, 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 right? We compound it into ourselves. What are we looking for? What's our strategy? Have we done our strategy? That's why strategy is so consistent. Strategy is so important. Drilling whatever you need to drill inside your head is so important, right? So, candle range theory, as we were talking about, is going to be your highs, your lows being swept. This is a little bit off. I would not use I should change this. Then I will change this. We should be using the body. Wicks are like, pressure. It's not really confirmation to me. I like to use the body because that's something that we can all agree on. It wasn't rejected at those levels. It was confirmed at those levels. So please use the body. But what you're going to notice here is you're going to see this candle range theory. Candle range theory is you're going to take the last high and the low. Any candle, let's go over this real quick. Any candle that you see here is going to touch the last candle. You can tell me every candle you look at touches the last candle. Meaning everything is going to repeat itself. The market is going to go up. It is going to sweep liquidity and it's going to continue up, right? If you see that, it's going to adjust on a higher time frame to Marubozus, spinning dojis, so forth, so on, whatever. Put them together, they are larger time frame bullish engulfing patterns and such, right? And you start adding them together. But every candle will come back into itself and sweep. No matter how it does it, whether it's a big candle, little candle, it will always touch. So it's always going to sweep. So we can assume things now. And things can start to be made as a pattern because this has happened for thousands and hundreds of years now, right? Or just century. I don't know what it is. I'm going to assume at least 100 years now. Don't quote me on it. But more or less we've seen a pattern and we've been able to back test and be able to notice that when these things happen, it's more than likely going to happen again and again and again and again, right? So now we see the volume starting to spike. Starting to see the volume spike on this, which could be a form of rejection, right? We could be coming back here to come test this, to come grab this liquidity to push up. So we could be we could see rejection here because there's not enough liquidity to push through, or we would have with a Marubozu. So we're pulling back to this liquidity. There's liquidity sitting here. There's liquidity sitting here. We're going to attempt to come grab this liquidity and push through, at which the next set of liquidity will be right here, because it becomes support, resistance becomes support, right? Unless we create some form of gap or imbalance, it pushes so high here that something else becomes liquidity. Sorry, I know I'm getting off track a little bit with this because we're doing candle range theory, but yeah. Okay, so candles will always sweep, right? So if we see a green candle and then we see a red candle like that, we can assume that the market swept the high and we can start looking for the entry on the low. Well, what do I mean by that? Well, if you were to lower the time frame, right? So let's say on the 1 hour chart, this is why knowing chapter 3 and 4 is so important. This is what you call an evening star. So as somebody who's looking for daily trades, I'm looking for a lot of evening stars, right? What is this? An evening star, right? I'm looking for a lot of evening stars, and then I can break it down and continue the pattern, right? So what we're doing is we're looking for the evening star, and then what we're going to do is sweep, which is this candle right here. We're sweeping, that's that wick. This candle and these candles, right? I can't even mark it. These candles right here are the wick, right? You see this pull up and down? That's the wick. It opened here, this candle, and I don't know, there's no time frame here. I can assume because I know these candles, right? This opened right here. We know because there's a wick. There's a wick. There's your wick. The 2 candles up. There's your wick. Then there's the run down. There's your Marubozu. There's no wicks. There's no wicks, right? So we can assume the market opened here, which is what it opened. Market came down, created a low, came up. See, that's the wick. It came up. That's the wick. And continued higher, which is this wick. But this candle was not done because it ended down, which gave us this kind of like inverted hammer look, right? It closed just about, here. It closed here, which gave us this look, right? So then we got this. It pulls back up, comes back down. Now, I could be mistaken. It could be right here, which is why it pulls up and pulls back down, whatever. However it's going to close. I'm assuming it closed somewhere at this level because this level right here is even. So we're going to say right here, it's all even, right? So, but you can see how it sweeps and it continues. In candle range theory, it's showing you that the next candle is going to be swept or it's going to take out a high low. Every candlestick touches each other. It will never not touch each other. It'll always sweep, no matter what, whether it's the wicks or the bodies, right? But more confirming is the bodies. Now we should start to see a nice little push-up attempt off this 9-day EMA, hopefully, because we got exhaustion here, and then we got the push-up. So buyers pushed up, try to give it. Sellers try to push in. We're going to see if it breaks through right here, because this looks like our battlefield area, to be honest. That looks like our battlegrounds, right? Whoops. All right, perfect. So, do you guys, for the most part, I just need to know if you guys understand candle momentum. Candle range theory is candle range theory. We're going to continue on. Do you guys understand candle momentum? The showing strong candles, weak candles, strong exhaustion, weak exhaustion. Do you guys understand candlestick moods and momentum?
Yes, Dan.
All right, perfect. Zach, Sony,
Yeah.
you guys understand candlestick momentum? This big Marubozu is good momentum. The exhaustion candles, these dojis right here, are bad momentum.
Yeah, we do.
All right, perfect, right? So now we have candle range, right? So candle range is always going to be something we're looking at. It's always going to happen to test each other. It's going to come back into it. I'm going to pull out the Fibonacci just to kind of show you guys what happens, because it also happens on a larger time frame, which is why you'll see that for some reason the candle's starting to pull back. Well, it's starting to take out liquidity it needs to take out before moving higher, because it needs liquidity to push off of. That's the only reason. We've got this marked out right there. Let me get this taken off. Man, this thing is playing with me right now. Not wanting to blow up off of this 200. I'm kind of positive for this because gold's been so heavy in the highs. So, and we're down at a lows and we're performing an inverse head and shoulders. So, I'm kind of hoping this will play out up there. What was I going? Okay, Fibonacci, right? So you guys see how this is pulling back. You see this run up. I want you guys to notice, this one's my fib. So I want you guys to notice something on this fib. Okay? The way the fib works, whoops, I'm so sorry about that. The way the fib works, whoops, let's take it off the pattern first so you guys can see what it looks like first. Right? The fib. Fibonacci retracement. This isn't a tool in a class we can go over some other time. I want you to understand that all candlesticks work like this. These are kind of like deviations. This is kind of like retracement, exhaustion, the way things move. Everything is never just a straight line. Nothing is ever just sideways. It's never just a line. That's why line charts like this are fucking ass. That tells me nothing. It doesn't tell me my high, my low, nothing. I have to hover it and have some UI. I want to see it. I want to see how it's reacting. I want to see the flow of it, right? I want to see these things. Okay? So, it's booty. Stick with your candlesticks. It is, it's just better. Okay? Your Fibonacci. You guys will hear me talk about the equilibrium, the equilibrium, the equilibrium, the equilibrium. What is the equilibrium? It's the 50% sign. My Fibonacci. It's my 50%. It is the middle section of any candle. Body, not wick. Wicks do not matter to me. When we talk, I do not care about wicks. If I'm stretching my take profit, I'll put it to a wick because I'm a push. But I'm more than likely going to take a majority of my candlesticks, or my contracts, sorry, at the body of the candle. And I'll let my 1-2 extra contracts that I'm pushing for extra money, letting run, I will more than likely let those be wicks or other deviations and stuff like that, right? But the candle is at the 0. Anytime you're reading a Fibonacci, you will probably try to pull it like I did for the first time, and I didn't know which one to touch first. Was it the 0? Was it the 1? 0, 1? Where do I go? We are 0% retraced. We are 100% retraced. So we will always click from high to low or low to high. And what do I mean by that? If we are looking for a continuation higher, we are going from our high to our low. The market will pull back into our 50% because we have, everybody understands supply and demand, yes? I just need a quick yes or no.
Yeah.
All right, cool.
Yeah.
You guys understand premium and discount?
No, it's
Yeah.
premium. Yeah.
Okay, so premium and discount. You would never buy anything at a premium price, right? You would if the market's at $400 all-time high, are you going to attempt to buy it at $400, or are you going to wait for it to come back down to $300?
Wait.
Copy
Right.
that.
Okay, so that's naturally what's going to happen here, right? So this, the higher side of your the higher side of, I don't know, the 50%, so 50 to 100 is your premium, right? If you're buying, right? Assuming we're buyers, right? Take the concept, mirror it if you're selling and shorting, right? But if you're buying, if you're above the 50% zone, you're buying in a premium zone. You would want to buy in the discount zone under 50%, right? So under the 3.382 is your discount zone, or under the 50%, and above the 50% would be your premium zone, right? So if we just ran from this low to this high, we are 100% not going to make any money, because if it goes sideways, we're going to fucking lose our ass off, right? But in order for us to buy, we would like for people to take profits, whatever, and for this to retrace back into at least the discount zone, right? So Fibonacci is not premium discount. Fibonacci is a mathematical number that came up by blah, 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 blah. You'll learn about it later. Cool, right? What we're looking for, the golden zones, right? The 61 and the 50. Because I've used Fibonacci so long, it's been instilled inside of me an equilibrium and a pullback zone. This stuff always happens. Things will always pull back 50 to 75%. I say 50 to 75% because a lot of people don't want to miss out on runs usually. So they usually jump in early, and that's usually what you see sometimes. You usually see a quick run up, and then it comes back down on a drastic, right? So it ran down, drastically came up, ran down, and then somebody jumped in real quick, and then it continued to run down real quick, right? So you've seen it run, and then it pulled back. You see it run 100%, pull back 50%, and then it runs another 100%, but then pulls back 75%. So I'm looking for areas right here in the pullback. Now, the reason why I say this stuff is because of candlestick range theory. The reason why I say that is because every candlestick always touches another candlestick, right? And since these candlesticks always touch another candlestick, right? For instance, notice how this candlestick has just ran up. I'm going to mark that out on my 5 minute. Notice how this candlestick just ran up, pulled back, and then ran up. I can assume that these candlesticks are starting to pull back and run up on the 1 minute time frame. Lo and behold, as long as we don't break this 9-day EMA and signal this downside kind of like this, we can more or less think, wow, we're not returning to this area. So I can assume I'm going to stay in this candle or into this trade. Why? Everything's telling me the pattern is going to continue. Does that really make sense, guys? Like, do you understand that?
Yes.
So if you notice, I said it's always going to pull back into the 50% zone. Now, this looks about 50% of these 3 bars. So if we go to the 5 minute, let's just pull this Fibonacci to help us from high to low, right? Oh, I'm sorry. You start at the low and pull to the... I just did it again. Boom to boom. Sorry. Because we need to retrace. I'm sorry. We have 100% retrace. So, I get confused with it still too. Not a big deal. So now when we break this down, we're going to be looking for either a fair value gap or a sweep of this section, right? We have not finished sweeping this section yet, right? But on the 1 minute, we have. Notice how we've entered the 50%. We tapped the 50% to the freaking T. Okay? And this will happen on bigger time frames. So let's just say right here, if I wanted to, I can mark out, let's just say, this is candle range theory, from this high to this high. Notice how we are tapping the 50% zone. Now, I wonder what candlestick that is. Notice how it's a nice big candle, right? Let's go down to it's probably a 5 minute candle. There you go. It's better than a 5 minute candle, to be honest. So if we were to do it on the 5 minute, we'd have plenty of room, and it would actually probably been a different golden. It would probably been a golden zone, right? So you can assume every candle is always going to touch another candle. This is the bread and butter. Always, always, always a candle will touch another candle. You are going to see it come into the candle. So when you see a Marubozu, if you see a Marubozu on a 15-minute time frame, oh my God, there's a Marubozu on the 15-minute. We just pushed over. We have this nice run up. I don't want to miss this, right? We're going to look at all the liquidity around it, of course. But what I'm going to do 100% is, let me mark it with a Fibonacci, right? At least a Fibonacci, because I want to show you guys the 50% zone. And it's going to come back into one of these zones. Like, I'm sure that because this is on a higher time frame, it doesn't matter, right? But I'm going to wait for it to confirm. I'm not going to just jump in the trade either. I'm going to let it bounce, right? Because obviously you see this long drag down. So if we were to just jump the moment it hit 50% and didn't wait for signal and confirmation, we'd fuck ourselves, right? So now let's go down to like the 2 minute, less noise. Notice, right? I want you guys to notice. Whoa, is that the same one we had? Okay, yep. That makes absolutely no sense. We have a lot of spinning action. Let's break it down a little more, right? We gotta see. Okay, so we see a respect line here. So, and again, you're looking for the most easiest way to read the pattern. So we're seeing exhaustion here. It's starting to pull back. And we should, where's my fucking, pulling back into it. We're hoping to bounce off of this level, which is also the 200 EMA. We're going to see people start stepping in. So you're going to see it pull back into it. And if you notice, it bounces, right? Oh, I'm sorry. We've seen it right here. Okay? So notice it bounced, right? Notice it bounced. I think it was right here, actually. Notice it bounced off the 50s. So we're going to bring it down further, right? So we're going to wait. This is why signaling confirmation is so look, it's sweeping it. The same candles that we're worried about on the higher time frame is happening right here. We're going to wait for it to sweep it and continue higher, right? So right now on our strategy, though, based on our 9-day EMA, we've just signaled, right? So we're waiting. That's a 1 minute. I want to wait on a higher time frame, but this is telling me, hey, I need to start looking on the higher time frame possibly to get out of this trade and take profits. We haven't touched on the 3 EMA. We're showing some consolidation in this line, right? We can see consolidation right here. We know that this is a sweep action on a higher time frame. Notice that? That's a sweep. Didn't I just say that, right? So these correlate with everything, right? Which is why we worry about higher time frames more. I don't know how bad I want to take this trade or take this exit, to be honest. That could be a dirty candle right there. It sucks because my break even is right up under this, and I really trust this to go a little higher. Again, I'm expecting this to pull back down into here somewhere and then come up. So I could take profits here, shrink my loss now that we're seeing this. Unless it rejects, of course, but I could mitigate damages and reposition myself in here if it comes in, which we're gonna obviously wait to see how that works out, depending on what happens here. You know, seeing a push up. Alright, but you notice how it's reacting to the 50% zone all the time. So every candlestick is going to touch another candlestick. What you guys can't do is get carried away in the lower time frame, because you guys can always say, well, this candlestick can keep going 1 second, 15 seconds, and keep breaking down. And you guys can keep trying to force money out, right? But the biggest thing is looking for a nice big candle that you can see, such as on the 1 hour, right? And you can mark, this is simple entry and exit, right? You can mark the high and low. Right, there's my high, there's my low. I can 100% assume that in between this high and low is my 50%. What am I going to do? I'm going to wait for some type of reaction to those lines. Why? Because naturally it's been proven that these lines have been swept every time, or they continue, right? No matter how it looks, every candlestick. We have wicks because it's being swept in those areas, right? So, again, I see a 1 hour candlestick. Right there, right there. I go down to the 5 minute, right? Wow, would you look at that? Notice how we get into the premium zone and we show a signal confirmation. And then what do we chase? The same previous low or high that we marked out, right? So you're always going to be touching the lows and highs. You're always going to always be touching the last candle. And that's how we can get into a trade, right? If we know on a 4 hour time frame, we're always going to touch. Well, guess what? I can pull this last candle. We're in an uptrend. I know we're going up. I know we just pulled back. I know I know we just pulled back into this area. That's an order block, right? Whatever, that's a bullish engulfing pattern. Whether you call it order block or whatever, it's a bullish engulfing pattern. Okay? We know that it's going to tap into here. We had buyers being bought here. Buyers stepping in here. So based off of this last candlestick, we know that at some point it's going to touch this low and probably go back to this high. Vice versa, right? Could plummet. Depends on how it respects these lines, right? Go into the 5 minute. Wow, would you look at that? Notice how on the 5 minute, right off our line, we do a nice little signal confirmation. Do we not? Nice little signal confirmation here. Well, where are we looking to go next? Well, to at least the middle. Can we take our profits here? Why not? Oh, where else can we go? We can go up to the highs. Oh, that was the highs. I didn't mark the middle. Sorry. But we go up to the highs, right? We go right back to the highs or the middle. I can say the middle, 50%. We guarantee 50%, right? So pull back into it. We see it as a sign of respect. Hit it again. And again, it's not going to be perfect. It's going to be defined. You're going to have to find these yourself. There's not always going to be clear examples for me to just throw on a live chart that I'm looking at with my chart. But the point is you can find a trade, right? And every trade is about money. So FOMO is going to be a thing with you. Because I could sit here all night and we could do candle range theory and this sweeps this. And when I send you, I'm going to send you guys in the group chat. It's 2 videos. It's part 1, part 2. It's going to be through the Google Drive, the same way for Sedulous, because I can't send it any other way. It's stupid. And I had to screen record it. Shout out to who made it, right? I don't know who made it, but I don't want to say I made it. But it's a beautiful video that shows animation, that shows exactly what I'm talking about word for word. So if you guys don't understand it, please watch it. It's a 20-minute video, and it fully describes, and it's animated. So they're able to, like, you know, show this picture. Where is it? They're able to design a bunch of pictures. They design a bunch of pictures and a bunch of examples to show this right here. And they're perfect examples because they created them digitally, right? Just to give you a clear mindset. Now, when you're trading, it's not going to be that perfectly clear. It's just the truth, right? You're going to have to anticipate, assume, read, price action, and all that. But once you guys are understanding the candlesticks and how these candlesticks mean things, like this is an evening, this, let me delete all my stuff again. This section right here is pretty much an evening star. When I see an evening star on a bigger time frame, let's break this down, right? We can assume it's going to come back into the 50% mark or the supply and demand, whatever, and it's going to continue to go, right? So if we see this on the bigger time frame, because we know what evening stars are, we studied our candlesticks. We can take our candlesticks and apply it to price action. We look for a 1 hour, and we look for what? We look for, let's just find an easy evening star. Morning star, evening star, whatever. Here we go. Evening star. It might not be a lot, but we're going to squeeze some points out of this, right? This might not be the perfect one. We got multiple evening stars right here. But the point is they tap back in and they go to the most recent highs or another area of liquidity. Look at that. Maribozu and balance of liquidity. I think I'm just going to mark it out just to mark it out. But that's, I mean, if I was to look like this, I would mark it out like that naturally because, I mean, you guys seen it, any fair value gap I'll mark out, right? On the 5 minute, we had one right here. Right there's one. We tap back into it. We could potentially tap back into it again. Either way, it doesn't matter. 5 minutes starting to pull up, hopefully. Looks like bears are getting exhausted. So let's go back to this, right? We went in and we found this area. Now, what are we doing? We're looking for a sweep. Okay? Of the low to the high. Period. It's a candlestick. It works for the daily, works for the weekly, works for every freaking thing you want, right? And what's so amazing about the EMA is it shows us our support, signals us when to exit, and when we're starting to die out. Same thing with our RSI, right? So, notice how that was our line. That was our line. At some point, we went below this line. We broke structure, right? I see this structure broke. We created a higher low. Well, we signaled and confirmed. I'm jumping in. We're going to take this and we're going to instantly go to the last level of liquidity, or I don't know, however much money you want, right? So it's just, you just jump in and then you signal and exit out. So I use the signal and exit out. I don't know how to explain it. So here we go. This would be our exit. Boom. From here, let me see if I can figure out price action. I'm sorry. I know it sounds stupid, but I don't even know how to describe it. So why we have dude, there's a marker tool that I should be able to use to give you guys the time or the points. Oh, there it is. Right? Price range. So we would jump in around here. We go up to here. be 12 and a half. Well, right there, technically. Boom. That's where we would get out, right? And that would be 11 points on gold. 11 points on gold is let's see. I don't know this stuff off the top of my head too much, guys. Sorry. I use NASDAQ. I've just been in gold because it's volatile. And it looks nice. It really does. Alright. So we're moving, I got 5 contracts, so we're moving at $1. We're moving at $1 a tick. So we're moving at $5 a tick, which is, I don't even know how much a point. But the point is we can create you a strategy. This is a terrible part to the video. I want to clip it out, but we're going to keep it raw, right? The point is every candlestick is going to touch another candlestick. It's going to sweep that candlestick. You're going to use your price action, your 9 EMA. You're going to use the momentum. You're going to use all of these things to determine, and that's what makes price action what it is. Price action is like everything you're seeing. What's going on right now? It's like the NFL in action. It's the NBA in action. It's boxing in action. Price action is what these candlesticks are doing right now, right? And momentum is a sign of price action. Exhaustion is a sign of price action. The same way throwing a football is a sign of, a play in the football, right? In the NFL, right? So these things are just actions. They're always going to sweep one another. And based on candlesticks that we know, knowing these candlesticks, such as evening stars, which we've seen, right? We can assume respect, and that the candlestick is going to continue. Every time we see an evening star, in some way, some form, it continues. And the point is, this candle range will always go low to high, and it will chase that liquidity on a higher time frame, on a lower time frame. That's why we do a top-down analysis. If you go, and it makes so much more sense, and it's a lot harder on the lower time frames, which is why it's a little bit easier to swing trade. If you notice on the daily, it literally, how do I trade every day? What do I mark? What should I be looking for? The high and the low of every day. Notice how the day, not yesterday or Friday, Thursday. There's your high, there's your low. Notice how the candlestick has wicks and body that's within it. We chase the low, then we chase the high. Or we chase the high, we chase the low. How do we know? Well, this is the high. We know that we went up first and came back down. Then we came right back up and started showing support at the end of the day, closed here. So what are we looking for? Well, we can look for a play of it sweeping highs or sweeping lows, right? Let's go to the day before. Notice how at some point it swept the lows again and continued to go higher, right? If we mark these days out, let's just say, if we mark these out, we're always going to see some form of sweep, respect, or disrespect. And what I mean by a sweep is a sign of respect or disrespect, right? Because a sweep can disrespect a support line or respect a support line, or it could be the same for resistance. So, and some of this sounds so shoddy. I'm not a professional teacher, guys. Just remember that. So we can always assume that it's going to chase the low. So remember, we marked, this is yesterday. This would be yesterday's low. So this was the low. I'm pretty sure this was the low and this was the high. All right. At some point, we swept this liquidity. Damn me. I just moved it. I just fucking moved it. I need to do this the right way. Oh, that's why it looked weird. There was 2 under it. Okay. So we're going to start. Now we see a higher day. So we're going to look for every day. We're going to start at this day and we're going to see how we can figure it out. Because once we break it down to the 5-minute zone, it looks like Chinese, right? So let's just say, because we don't know what happened that day. I really don't. We're going to move it back here. And I'm going to assume that this was the high and this was the low. We're just going to read the day as it comes out, right? That's about 12 o'clock at night, whatever, right? High, low. We're going to wait for this area or this area to be respected or disrespected. Right now, we respected here. So because we respected here, I'm going to assume we're chasing these highs, right? Does that mean it can come back down here, touch this liquidity, and then go back up? Sure. But even if it comes back down here and touches this liquidity, gives me a chance to enter again at what? A discounted price, not a more higher price, right? So that's why we need to be patient and we need to watch, right? Because if it does break this, then we can get back on the re-entry or the breakthrough, right? So either way, we can tell what's going to happen based off of price action, and we're going to let it flow out. We have just supported this line, which means we're chasing this line. Let's see how it happens. Right? We're coming back down. Again, we touched. Did we break support? No. We're going back up to chase again. Notice how we signal and confirm. Let's take a trade to this side now. Boom. Now, this was a sign of the previous day's low, or the next day's low, or whatever, high or low. Remember how it swept? So we see it sweep right here somewhere. And then it continues. Now notice how we're still chasing these last highs, right? Now, this is the daily low. This is the lowest it went for the day before reaching these highs. So boom. We took our trade and we made our money however we made our money. Okay? Now we're looking for the day's high. Bomb. Now we see the day's high. Cool. So now we've seen a day high and a day low. Well, what's going to happen tomorrow? Well, we should look for respect or disrespect of this line, right? And if we respect this line, we can continue upside. If we are continuing upside, we want to go into the history and we want to see if there's somewhere else that we can find that has liquidity that we can chase, right? If it doesn't have a high, we can assume that this will probably sweep, right? And come back down, chase liquidity, come back down here, grab these lows, and then shoot back up high, because as it came down, we created more liquidity coming down to go back up, right? Man, it looks like we're starting to get thrown out of position. That number right there is looking really ugly. Hopefully it starts pushing up and we have upside liquidity. So, again, oh, sorry, I ruined it. Damn me. Okay, so we get up to this high. So, again, we're going to want to see it sweep or respect. So, we see it come. Oh, it broke down. There's our 200 EMA because we use it, right? We see the respect of the 200. So, let's give it a second. Can we respect this line? Notice how we start chasing this bottom liquidity. Oh, we're going up again. And we're chasing the highs the whole time. We stay at this high. We're going to come down and chase this liquidity again one more time. Bounce. And we chase new highs, right? So you're always, and notice how it wasn't an instant sweep. It wasn't an instant sweep. On a higher time frame, this would look like an instant sweep. Because there's the in and there's the out, right? Or we have the head and shoulder here. I don't know if you guys see the head and shoulder. I really don't want to make all those marks, but because I don't have, I guess I do have it. See the head and shoulder there, guys? And then a chase there. I don't know if you guys can see that, but it always pulls back. Now, what are we looking for? 50%. So remember, 50 to 61%, yada, yada, yada. So if we marked out our day high and day low, it came back to the 50% mark, respected our 50% mark, chased the high. There we go for the high. Now we got a high and a low. Comes back to the 50% mark, chases the high. How do we know it's chasing the high? It respects the 50% mark. It's not just chasing these liquidities to chase these liquidities. What I'm telling you is watch it create the high and low. Watch the daily high, watch the daily low. Notice when it's a daily high and daily low, it's going to pull back. Here we go. Another daily low and high, another daily low and high. Swept, support, came back to the 50%, came back to the 50%, and it still respected, supported, and continued in its direction, right? So we're looking for respect. We're looking for support. We're looking for morning stars. We're looking for evening stars if you're going down, right? But we're looking for the support of the key levels. How are you guys going to find a trade? If you guys want the easiest trade possible, you guys want to just get in, start trying to make some money, you guys have the 9-day EMA strategy for your signal of entry and exit. You guys have your risk management, knowing how far, how much you should risk, you know what I'm saying? And now you guys have your price action. What should I mark out? I should definitely mark out my daily high and low. And I know that every candlestick is going to get swept or continue or come back to these 50% zones, premium discount zones. So let's just say, for instance, all of the, it's at these highs. So if it's at this high, man, dude, I can't do this. All right. We got some people leaving. I know it's getting boring and redundant. I'm trying to drill it in your head, guys. Right? These are your highs and your lows for your previous day. We can assume we had a bearish candle with bullish rejection. So where this closed and this opened, right? So now we know where this closed and opened. Well, we're seeing respect of that close and open. We're seeing a sweep of that line. Notice how it was just a quick sweep, and then this is an inverse head and shoulders like we seen earlier. I know it sounds confusing, but it makes sense once you start reading it and understanding it, right? And we're able to see the respect of this, I would call it daily open, or weekly open, to be honest. This would be our weekly opening price, right? Because we opened here, came back down and went up, and we can see that based on the daily chart. We closed there for the week. Opened up, shot down, attempted to shoot down, and went back up. The same way before we closed, we tried to end the week with a shoot down. Well, in the morning, on the opening, we're trying to shoot back up. So this looks like a decent pullback. Hopefully make some money with this. Does anybody, and I want to have time for us to go over, does anybody have any questions about candle range theory, how it works? Please ask me questions right now so that anybody listening, when we have it recorded, could get it defined for them. Is there anything you're not understanding about equilibrium, candle range high, how it touches another candle, how it's supposed to pull back? Does anything about the previous day high and low, weekly high and low, does any of that confuse you guys? I'm not even talking to them myself. All right, break. Good.
Daniel, I don't have any questions. I'm still, trying to grasp it though. So I'm not exactly sure what to ask.
Have you been reading candlesticks at all? Are you
pretty much in the same boat?
Do you guys understand what's moving, how it's moving at all? Do you guys understand how to read this at all? Like, do you see that we have higher lows happening right here on the chart?
Yes, I see that.
I'm able to see that.
Okay, perfect. So we can assume that these big candles are buyers stepping in. And if you notice, we're breaking highs as well, and we're creating higher lows, right? So even if this candlestick was to pull back, as long as I create a higher low, I know I'm still in an uptrend, right? So we're going to use those uptrends as supply and demand zones, and we're able to understand that in a higher time frame sooner with candle range theory, right? So I wake up, it's 9 o'clock in the morning, I haven't looked at the chart for 8 hours. What am I going to do? Candle range theory tells me that every candle touches another candle. So if I need to enter a trade, I notice the market's bullish. I see a bullish candle. That candle has to be swept at some point at the equilibrium. So how can I get in? Through candle range theory. I can find a trend and then confluence my best entry point of interest through these underlining factors, if that makes sense. Does that make sense for you guys at all, or is anything confusing you guys? That's why I said this is the most important class. This is price action. You have to know how bulls and bears fight.
Yeah, I'm getting it.
Do you guys understand what a spinning doji is?
Yes.
Zach, can you describe what a spinning
Yeah.
doji is? When it comes to momentum, I should say.
My bad. Taking me a second. I'm driving to pick up my daughter at the same time as all this.
Yeah, you're good.
So, spinning doji is, at least the way I'm understanding is when the candle itself is going fairly volatile, you got a little bit of volume going on, but you see where it's gone for high and low.
Exactly, and that would be confusion. It's an indecisive decision. So when you see spinning dojis, if you guys have been studying chapter 3, you should know what a spinning doji is. If you see a spinning doji, it is exhaustion. It's an indecisive market, right? Notice how we ran up, and then we're having spinning dojis go on. We have bears being indecisive right now. If they want to push the market back down, and bulls are kind of stepping in to kind of keep this up, to give some pressure on the bears, but we don't know what's happening yet. So we can assume, one, bulls are still in control because we have nice momentum here. We have a nice upside. There's no reason for it to, go crazy down, right? We know that this right here is support or resistance, and we have higher lows happening. So we know we're trying to funnel ourselves out of this hole upwards. So what we're looking for is what? A spinning doji over this line or a Marubozu over that line? We're looking for a Marubozu over that line, right? And the reason why is because Marubozus are what? Momentum candles. They're strong candles that are big and bearish. These are momentum candles. These show us good support. This shows us nice support. You notice how there's a little bit of an exhaustion here? That's why when we see this exhaustion happen right here, there's kind of confusion. Bulls weren't certain. Bears came in and were able to push it down. Bulls said, oh, well, I guess it's our time to run in, right? We have a small increase in volume. We've signaled above side. We're being overbought, possibly bouncing off the 55 right here. So we see the support through price action. We see it through the higher lows. And so long as we keep that trend going, we're good. And we're going to see this resistance right here as of now, right? What I don't want to see, because I'm in a bullish position, is for it to come down here and take me out, because then it's going to come up here and then drop back down and possibly go down to this low. From this high, 50 to 10, is literally 40 points. That's almost $1,200, guys. You know what I'm saying? So there's multiple ways to enter. And then again, this would be a descending triangle if it did happen that way, right? But right now it looks like we're chasing highs. I don't think we'll do a flag pattern here. I really don't. I mean, it could. It really could. But I'm expecting it to kind of come down to maybe, the 50% zone. And then maybe push back up and go chasing for highs, right? That's the 15-minute. If we look at the 1 hour, well, let's not even look at the 1 hour, I guess. 4 hour maybe? Nope, it's probably on the 2 hour. But, I mean, we're at the 50% zone right there. So let me see if I can find it right there. So, yeah, 50% zone is right there on the 1 hour candle. We just bounced off of it. So did I get in on a pullback of the 50% zone? Yeah. Is it showing support? I mean, yeah, there's 3 bearish candles being pushed up, not wanting to go lower. It should be breaking out here if it was disrespecting my 50% zone, right? It should shoot down, go down to a lower time frame. Remember, as you go down into a lower time frame, you start seeing, notice how we have that same candlestick right there as we did right here. What did I mark out right here? That's crazy, right? I mean, is that not crazy? I marked a 15-minute. And just me marking the 50% of the 1 hour and the high on the lower time frame, we're creating the same image I created on a bigger time frame. Right? Confluence, price action. We're going to do, it's going to happen, right? It's going to be consistently fluent. And if you're seeing these things and understanding what I'm talking about, understand that you're grasping what I'm talking about. If you're not kind of getting it, then understand you just need to read your candlesticks more. Understand open, close, high, and low better, right? You need to understand Marubozus, spinning dojis. How does a candlestick open? How does a candlestick close? What is the high? What is the low? Babe, can you heat those up for me, please? Babe, can you heat those up for me, please? Because and the reason why I say this is because every candlestick touches another candlestick, right? So if you understand how opens, closes, highs, and lows, it's going to start looking like it's going to start making sense to you how every candlestick touches another candlestick. So what I'm going to do is I'm going to bring up TradingView. And this is why it's so It's so crazy, right? Because this might help you guys understand the concept of candle range theory. I found this and it's a really cool indicator on TradingView. Okay, so you guys see the 15-minute. We're on a 15-minute chart, right? On the 15-minute chart, I'm going to pull up an indicator. Now, this is a 15-minute chart. Notice how, oops, sorry. Okay, so you see that, right? The 15-minute. This candlestick represents 15 minutes. And you can see that clearly on the 15-minute chart. So you see how they look the same, right?
Yeah.
You guys see how it looks the same? There's the wick and everything? Come on.
Yes.
Push up. I don't want to see this die. We're starting to get resistance. Sorry. Wanted to check that. I started to see resistance. Whoops. Wrong one. Alright, so I'm an idiot. I see it right here, duh. That was a blonde moment, guys. That was a big blonde moment. I should know where I'm at because we're looking at it. Alright, so you see that it's moving as this is moving. It's the same thing, right? So now look at the 1 minute. All of these candles make that spinning doji. There's the high, there's the low. Notice how we're at the 50% zone though, right? It's a spinning doji. Means we're indecisive of the past high and low for the 15 minutes. Can you guys see how that's confusion in the market? We're not in a premium and we're not at a discount. What do we call that? Noise. You see how 1 minute candles affect the 15-minute candle? Because the 15-minute candle is still up on there. I know it's getting late. My bad, guys.
That's all good.
I'm boring people. This is a hard class. And I know it's a rough one and it's a lot of... This will probably be a class we have to redo. I'm not the best at teaching this one, huh?
No, it's all good. It's just more we need to pretty much grasp.
Yeah. This is
It's just a lot to take in.
Yeah.
This is why I've been working you guys up, telling you guys, read chapter 3, read chapter 3, read chapter 3, right?
Yeah.
And inside the book, we also have candle range theory as well. So it's going to make a lot more sense, I promise you guys, when I send you the animated video as well. You guys will really, really understand it a little more and how it works. Because, again, it's hard for me I have no way to physically move these candles to kind of show you how it works. On an animated digital copy, they're able to show you. So, but the way it works is these candles literally go into each other, right? And because these candles go into each other, we can assume another candle. Now, this higher time frame candle, when we break it down, does the same thing, right? So, like, I can move this. Let me see. Let me change this to a 4-hour candle. Let's change it to a 1-hour candle, right? So now it's going to be based off of the 1 hour. So that's what the 1 hour looks like, right? Now we got to go down to the 1 minute. Well, that's what the 1 hour is made through the 1 minute, right? That's how it looks. That's the 1 hour looks like this because the 1 minute candlesticks look like that. Does that make sense?
Yeah.
Now at some point these highs and lows will always be either touched or swept, right? And it sounds weird because at the moment it's not being done, but that's because it's on a higher time frame candle and we're doing it to these lower candles, and we've got to keep the story going, right? So the story is not finished because the hour is not done yet, right? So this hour is still making itself. We still have another 30 minutes for this to go up and then back down, or to go down and back up when it comes to the 1 hour chart, right? So we might, on the 1 hour chart, be going really high still, right? We might be going high, but first, on the 1 minute, we need to take out this one down here, right? because it's just 2 candlesticks on the 1 hour chart. So we come back down, sweep the liquidity real quick, and then go back up and start working. Ooh, that's not good. That's not good. That's not good. I don't like that look. I don't like that. That looked like a looks like a rising wedge. Looks like a rising wedge on the 1 minute. It looks disgusting. That looks disgusting. Is that the NASDAQ? That doesn't make sense. Yo, am I tripping? Like, I'm not mistaken, right? I'm on the 3 minute chart. This is moving up. This is moving up, right?
Wait, so are you trying
This
to pull up
this
like
is
the
well,
same
this is
thing for both?
yeah, that's what I'm saying. This is both, isn't it? MGC,
No, right here is gold.
MGC.
Oh, that's odd.
Even on the 1 minute, it doesn't.
Macro, MGC.
It doesn't look like that.
There's a lot of resistance in ETC right now.
Bro,
Yeah.
that doesn't. But that doesn't look like that. I'm not tripping, right? Those are 2 candles. The last 2 candles are red. These last 2 candles are blue. That's an entire different freaking chart. That doesn't make sense. I don't get it.
That is odd.
I don't get it. That doesn't. Because I'm looking at the trading view, I'm like, wow, this thing looks like it's really bad, but I mean, it doesn't look like. Is this inverted?
Yeah. One is going bull, one is going bear.
Nah, it's definitely not inverted. Dude, I'm not tripping. MGC, micro gold, right?
Mm-hmm.
And then we're going here. MGC. I'm not even going to put. I'm just going to put MGC. It's the same fucking chart.
What the heck?
Bro, what is going on here?
That's weird. Mine does not look like that at all right now.
And that's a 1 minute chart. Alright, well. Alright, class is over for the night. It's good. We'll go over it 1 to 1. I'm going to end that video because it's a long video. But we can go over it more, guys. Because I'm saying this because we have people that didn't show up tonight that are hoping to watch this video. I know it was a little difficult. I know it was probably mind-bending, really fast, really, chaotic. Read chapters 3, read chapters 4. You need to learn it, right? Once you start learning those, we can put you into chart patterns, and all of these things together make price action. The only thing I want you to know is that candle range theory. Every candle touches the last candle. So when you're worried about entering and exiting a trade, where or how you're going to get in, use previous day highs, previous day lows, and watch for those levels to be respected. Watch previous week highs, previous week lows, and watch those areas be to be respected. Always do a top-down analysis. The higher time frames are the most important. The lower time frames don't give a shit, right? It doesn't matter. And those lower time frames pull and are magnetized to those higher time frames. And it's just that simple, right? It's literally just that simple. So then what we're looking for is a sweep of the market and a pull to liquidity. And that's what we're going to do every time. And the best thing is all of this stuff doesn't need to make complete sense. The only reason I want it to make sense is so that you guys are able to learn other strategies, right? We can implement this 9-day EMA strategy into this price action, right? So when we see price action doing something, we go, oh, I think it's going to be bullish, but I don't want to rush. So what do? We wait for the signal of the 9-day. We wait for the confirmation of the 9-day, right? And then now we have the bullish sentiment and the bullish signal and confirmation, and then we're able to use price action, liquidity, and certain other things to help us determine, 1, an emergency stop, Or two, how are we going to stay in? Why are we going to stay in, right? Am I going to continue to stay in? Does that make sense? And it's all through that. Like, for no reason, as you guys see, there's no indication that I should have got out of this trade yet. You know what I'm saying? So therefore, I need to hold fast, not get into my heart, and hold the strategy that's at hand. And the strategy is going to have to be determined through price action. I can give you a entry, I can give you a signal, I can give you a strategy, but I can't explain to you price action or I can't give you a nice plate of food that you can eat if you can't understand. You know, you're not going to try something you don't want to eat. And if I can't explain it to you, you're really not going to try it. You know what I'm saying? So I need you to read the candlesticks, because that's how you guys are going to understand what I'm saying more than anything. Read the candlesticks. Notice how we're taking out a high and we're showing support, right? Price action is determining that for me. I can tell because the moment we came to this line, we have a Maribozu. We disrespected that resistant line. Coming back down to an area like this, right? 9-day EMA. And I'm just gonna, I'll close my
Order
position.
filled.
I'm up $122 for the day, right? So
Right.
that's still pretty nice, and it's still going up. I could have waited, but I want to close this out. But always use previous candles. History is so important, and knowing your candlesticks is so important. It will bring price action out. If you guys don't know candlesticks, this stuff is going to sound like gibberish. If you guys don't, like, and that's literally what I mean. When I'm sitting here talking and saying Maribozus represent momentum. It's all in the book. It's all in the book. So when you read up on Maribozus, you will know when you get to chapter 5, candlestick range momentum, when it says a Maribozu or a big green candle, you know what it is. When we describe what a big green candle is, or when I say, hey, we've got momentum going right there, you should be like, oh, that means Daniel has 3 Maribozus, or at least a Maribozu. What time frame are you on, Daniel? The 5-minute time frame? Okay, so if there's a Maribozu on the 5-minute time frame, there's probably at least 3 Maribozus on the 1 minute. Momentum. Right? If we have an exhaustion candle, a spinning doji on the 15-minute, I could probably assume that the buyers kept getting taken out. You know what I'm saying? So I'm gonna leave you guys with that. I'm gonna hop off of this recording.